Let's bring on board Kunal as well as Kush and figure out what they're making of the trading day so far. And Kunal, hi afternoon. Let me start off with you. Much unlike what one thought when we walked into trade today, we've not done bad at all.
Yeah, I think it's a good day for the markets. And the Nifty is back again about that 21,600, 650 odd mark. The Bank Nifty is also inching, back closer to that or 40 about that 48,000 mark on the spot levels. The premiums have come back for both the indices, and I think the action today is more towards the mid caps and small caps because both of these indices have made a fresh high for themselves. So I think it's more like a usual kind of a market day, what we've been seeing over the last 2.5 odd months, where you've seen the mid caps, small caps outperforming, as well as the index, benchmark indices, the Nifty, and many of the other sectors trying to move in sync with the overall market tone.
Okay, so that's the take at the index level. But Kush, what should one do with the real estate pack? A lot of movers there, and interestingly, the names that hadn't moved, the likes of Century Textiles, Rustomjee, AK Keystone Developers, they're all moving towards the second half of the trading session. Are there any other names which you're spotting that have been a bit of an underperformer and likely to move?
Hi, first of all, very good afternoon to you, the entire team, and all the viewers. Well, you're right. To answer your first question, what should one do with the entire real estate pack? I think, ride the wave. Just because these stocks have shot up, too fast, at least in the last couple of sessions, doesn't mean the rally is over. In fact, most of these stocks, if you see, the volumes are picking up and they aren't even close to the, overheating territory. So most of them just hold on to, these ride the momentum. One stock that we've had on our radar and we've recommended to our clients as well is Shriram Properties. That's one stock that has not really made the cut on a lot of lists, and that's the one that we've been tracking. It's performed fairly well. So apart from your big names like Godrej and Prestige, Shriram Properties is also something that we've got on our radar.
That's quite an interesting pick there and quite unusual at that as well. Shriram Properties, which is a buy coming in from Kush right now. Let me also welcome on board Mayuresh Joshi and figure out what he's making of the market right now. Mayuresh, hi, afternoon. Let's have your word first on realty because after an excellent 2023, seems like it's raring to go this year too. Just looking at the gains today.
Afternoon, Aisha. First of all, I think let me wish you, Anisha, the entire team at Etina and all the viewers of Etina a very healthy, wealthy and a prosperous 2024. Having said that, I think the kind of momentum that real estate stocks are witnessing today clearly indicates the kind of demand momentum that all these stocks are having. Any new launches that are coming through are getting lapped up pretty easily. And once we've seen that the real estate cycle, once it enters that mid phase, there is further acceleration. We are exactly at that midpoint in the real estate cycle, which carries on for 6-7 years, probably in the third or fourth year, which means there is further acceleration that can be expected in the next few quarters and couple of years as well. Having said that, the kind of unsold inventory that is coming off the books of all the developers and the pre-sales velocity that is happening is clearly going to give momentum in terms of cash flows and the reported numbers as far as the next few quarters are concerned. The second element is the deleveraging that is happening on the balance sheet as well. So a lot of players are deleveraging their debt to a large extent, which is also a very healthy sign. And the combination of demand and supply, both is probably expected to pull up the expectations of how profitable earnings will play out for the sector as a whole. So the momentum can very well continue. My own take is that real estate ancillaries, plywood stocks, Century Ply as an example, Green Ply, Green Lam. So plywood stroke laminate stocks have not done as greatly as the real estate stocks have. They should be a proxy to the real estate play as well. Numbers have been pretty okayish so far, and therefore I think the expectations in terms of input costs stabilizing, demand coming back, and that reflecting on better volumes going forward with better realizations should result into good operating leverage as we see. So I think there might be a good chance of a good EPS and an RS rating upgrade as we see at Markets with India. And therefore these ancillaries, Aisha, should also probably be kept on your radar to do well over the next few quarters.
Yeah, no, that's a good point. The building material and the rest of the space also is likely to follow suit, perhaps. Just wanted to complete that point on Century Textiles because they had just come out with a presentation. They're talking about the gross development value of around 5,100 odd crores that they're expecting in FY25, and that's the reason that stock has now surged 11%. Let's pull up some of those graphics as well because they're talking about the next leg of projects which they have in development, and project-wise, they have given the gross development value as well as the potential square feet. So in Worli, there are a couple of properties coming on board, the east and the west, and then apart from that as well in Thane, Bengaluru, they've come out with a slew of launches, and for each of the launch, what kind of gross development value are they expecting over the next few years, because that's a very high number that they've put for themselves in terms of 2,700 crores for a property and the likes, and it adds up to quite a bit. So that's the reason that stock is now flying away in the trading session. It's high up around 11%. But one stock which has been flying away since the start of the day has been Sobha. It's up around 18%. Let's go across to Gaurav to get a sense as to why Motilal Oswal has picked this stock as one of their top bets, because if you look at the entire sector, you have seen that there has been a massive re-rating in the year gone by, but they're expecting that this year is going to be quite similar. Let's go across to Gaurav and find out more.
Sure. So let's talk about the Sobha. And Motilal Oswal has listed this stock as a top pick of their 2024 bet. And the stock, they have given an upside of 20% and the target price of 1400 rupees per share. Now, if you look at the stock performance, the stock has already soared almost by 15% in today's trade. So let's see what the company is exactly doing. So Motilal Oswal believes that they are set to outperform the growth in terms of the growth going ahead. And this is also going to be led by the profitability of the company. Now, they believe that company is focusing on unlocking their vast land parcel that they already have. They already have like 30 to 40 million square feet of the projects which may come in the next 3 to 4 years, and this is going to boost the growth CAGR and the pre-sales by 25% over the next 2 years according to Motilal Oswal. They also believe that they are exploring the opportunities outside their specific region. So for example, if you talk about Bangalore, it used to contribute around 70% in FY20 to their sales, and now it contributes only around 54%. So they are diversifying their portfolio as well. Let's talk about the performance. The company has already reported 30% CAGR over the last 2 years, and the company's net debt has also reduced almost by 1300 crores in the last 2 years, and now it stands only at 0.6 times the net debt to equity ratio. If you talk about the EBITDA, management has guided that EBITDA can be in a range of 30% going on, and that is why Motilal Oswal also believes that if you look at the peer comparison, the stock is trading almost 25 to 40 percentage lower than their peers, and that is why they had given a bullish target on Sobha, and we already saw that Sobha has already performed almost 15% in today's trade. So it is really interesting to see how the Sobha will perform from these levels.
Okay, that's the take coming in on Sobha. Kunal, you've always preferred DLF and Godrej Properties, right? Would you go down the barrel and look at Sobha and the others?
Well, I'll add Anantraj Industries to that list. That's another name which I've been bullish on. All three of these stocks have been doing reasonably well, and it's really very difficult to try and pick and choose, any of the other stocks, because more or less when you try and club the returns for these stocks in a span of 3 months, 6 months, maybe 1 year of time frame, it could be more or less the returns which the stronger names from the real estate could probably garner. So for example, DLF over the last, I think 1.5 2 years has moved from 400 420 to now 700 750 odd mark for itself. Anantraj has moved from 100 110 to now I think 300 plus levels. And Godrej Properties of course has been doing reasonably well over the last many months, and today of course the stock is up some 8-9%. So it's very difficult to try and find a strong outperformer when you look at this in a time span of 3 months, 6 months. So I'll stick with these three names as of now, purely looking at the recent charts as well.
Okay. Kush, I wanted to discuss a couple of these index buzzers with you. NTPC, which is up almost 4%. What would you recommend there? And Infosys seems to be a bit of an outlier within the IT pack, because the rest of the IT pack, whether LTI, Mindtree, TCS, they're all down and out, but Infosys is holding strong today.
So let's take up NTPC first. The stock had seen a stellar move, had gone into seriously overbought territories for a while, but then some consolidation and some profit booking, and it's again within comfortable zones, at least from a momentum and an overheating perspective. From here on, I think the stock will course a new chart. It'll probably see levels of 340 and 345 in the coming weeks. The kind of volume pickup also that we are seeing, it's given a breakout above that 315 level after a couple of attempts. So I think this is here to stay for from here on. a fresh entry is warranted. As I said, 340, 345 are the targets that we're looking at, and 307 is a very strong support zone, so that should act as stop loss. As far as Infosys goes, well, again, today it might seem like an outlier, but again, on the whole, not a very encouraging setup. The stock's been under pressure, a very clear lower high pattern reeling under its 20-day moving average for the last 2 days. So for now, for me, it's an avoid. I would consider this above 1530, but for now, I would just put it on a wait and watch list.
Okay, wait and watch list coming in for Infosys as of now. Let's take a look at some of the other movers as well, and let's revisit the list from yesterday. And some of the pharma names were holding out very well, everything from a Spark to a Biocon. All these stocks were quite a buzz in trade. What are they doing in today's trading session? A lot more tempered, or at least it looks so optically, given the moves that you're seeing within the realty pack. Mayuresh, your thoughts? Because pharma is coming up on most people's radar as quite the contra bet right now.
Oh, it is. And to a certain extent, 2-3 things which might work in favor of pharma, Aisha. One, obviously, the product mix. So higher mix of specialty products and higher margin products, including the branded generics, will probably mean that pricing should remain in favor of a whole host of pharma companies. The second element is, in spite of what we've probably seen in terms of the generic drugs, both pricing and the margin related issues, they should largely stabilize going forward. And if or any of the FDA issues are resolved for a few of the plants, a significant portion of new launches that can come through can probably abet a lot of the earnings growth that can probably be seen in the next couple of years. Having said that, Sun Pharma, Cipla, and Lupin probably remain as holds in our global portfolios. From an earnings perspective, our take is that Torrent Pharma and JB Chemicals on declines or pullbacks can probably be looked at. Again, the key triggers remain same across both these stocks. Torrent largely into branded generics, which is more than 2/3 of their revenue. A large part of the revenue coming from branded means EBITDA margin should sustain between 29 and 30%. Whole host of new launches expected from their Dahej facility, which should prop up earnings and return ratios as well. And similar for JB, domestic formulations have inched up quite significantly for JB Chemicals. We are also expected to see a whole chunk in terms of the CDMO business actually picking up steam in the next few quarters. And a combination of both this should reflect very positively on EBITDA margins, which is very, very similar to that band of Torrent of 28 to 30%, resulting in better earnings growth because of stable margins. And again, expectations of new launches coming through, which should be better margins and accretive in terms of return ratios. So a couple of stocks on pullbacks can probably look at as we see it at market value.
Right. In fact, just today we were chatting with Nitya Balasubramanian as well of Sanford Bernstein, and she believes that the current rally in pharmaceuticals is longer term and is here to stay. Here's what she believes the prospects of the sector are.
If you are willing to accord the India premium on to the healthcare sector as well, I think it's trading at a similar premium to Nifty. That being said, from here on, we think a lot is priced in. The softer pricing environment is priced in. We are expecting 9-10% growth at least from the India market. The higher gross margins are priced in. In terms of significant delta from these levels, at least sitting here today, I don't have visibility into any big catalysts. But that being said, we don't see major downsides either. So it's possible that multiples, therefore, are sustained.
Okay, so that's the latest coming in on the pharma sector. But separately, in terms of the market, there are a lot of pockets which are interesting right now. Case in point, the kind of Q3 updates that we've got from the banking sector, and the smaller names, the likes of Utkarsh Small Finance Bank or even AU Small Finance Bank, have reported a very good growth. And of course, the big one, Bajaj Finance, again keeps surprising us with that 30% plus kind of growth rate. No wonder then that stock is up almost 4%. Mayuresh, within the updates that we've got so far from the banking and the financial services space, which ones are the ones that really took your attention?
So IndusInd Bank, Anisha, gave a decent set of numbers. And again, from a valuation matrix, it's not too expensive. So if they're able to carry on this trajectory, as they pointed out in Q3, and it seems to be a high probability that as we head into the next financial year, And in a scenario of a rate cut happening both globally and locally as well, the NIMs should bounce back very, very smartly. And because of their stable balance sheet performance so far, the expectations is the second half of the next financial year, they should be able to carry on the good show. Similarly, within the PSU pack, Bank of Maharashtra has delivered again a decent set of number. The overall business grew 18-odd%, the advances grew 20-odd%. And a similar story is playing out, though you'll see NIMs probably getting compressed over the next couple of quarters. First half should show a steady state recovery and a significant one in the second half itself. Apart from this, I think what we probably like is also a smaller stock within the PSU universe called Bank of India, because most of the parameters that I spoke about in terms of asset quality pressures coming off, in terms of provisioning being relatively high, and a high saliency being put in terms of recoveries and upgrades. If that probably plays out for the better part of FY24 as well, the bottom line growth can be significantly higher and return ratios can also bounce back very, very sharply, specifically ROEs. So I think it probably fulfills most of the criteria that we look at markets with, including ROEs, including the kind of price action that we probably desire, are all getting set in, expecting fundamentals to probably remain steadfast for almost of these PSU stocks.
Okay, so still, positive on select PSU banking names, and Bank of India is one name that you like. But let me quickly bring on board Asesha as well to tell us the numbers in terms of the Q3 updates as well. Asesha?
Well, yes, first up, let's talk about Bajaj Finance. Very strong operational data for the quarter gone by. The stock is holding up nearly 4-odd%. Loan growth was very strong at about 31% or at about 26% on a year-on-year basis. AUM growth, meanwhile, was also very strong. It saw an uptick of a whopping 35% on a year-on-year basis. And Bajaj Finance is likely to surpass its FY24 guidance. Very strong operational data. The stock is holding up in trade today. Meanwhile, IndusInd Bank is also holding up. Deposits are up 13% YOY, while advances are also up nearly 20%. Angel One, another strong quarter for Angel One. The stock is holding up with an uptick of nearly 5-odd%, where number of orders have seen an uptick of 21% on a month-on-month basis. Gross client acquisition is up a solid 54%, with ADTO or average daily turnover rising nearly 22% MOM. Their market share has also risen nearly 38 basis points on a month-on-month basis. Ujjivan Small Finance Bank, meanwhile, has also reported strong operational data for the quarter gone by. Deposits are up 29%, disbursements are up nearly 17-odd%. Bandhan Bank, another strong quarter where loans and advances are up 19%, deposits are up nearly 15%. Let's also talk about AU Small Finance Bank. The numbers are largely in line with what the street was working with gross advances soaring nearly 20% on a YOY basis and deposits up nearly 31%.
Okay, Asesha, we'll leave it at that. All those stocks pretty sensitive to their Q3 updates coming in. Bajaj Finance, of course, one of the top movers on the index today. We'll take a very quick break on that note. As we do that, hear out from Rajat Rajkharia as to where he thinks the profit pools are going to be created this year.
I don't know how much market delivers in 2024, and I think it's going to be a rather volatile year, right? Just because of the levels where we are starting, right? But I think the trend is more. And lastly, one thing that we got taught last year, right? India, while top down is very good, the opportunities on the bottom up are fantastic. So safe to say that 15-20% earnings growth is likely, not just this year, and that's what our estimates are also pointing out, right? And when you have aggregates at 15-20%, then you have to find out buckets which grow more than that, because those exciting growth sectors are the one where you typically try to compound your money. I think if we do base case 15% earnings growth, right? And I think that the rate cycle in the global markets end of this calendar year would be lower than where we are starting today. That's again a consensus that you would see getting built on. Assuming no re-rating, at least plus minus 2-3% should be the index return.
Okay, so that's the latest coming in terms of where the profit pools are likely to be created and what should be the earnings expectation for India in 2024. But other than that, Mayuresh, how are you approaching the markets right now, especially this, of course, the debate around large caps versus mid caps, small caps? Where are you seeing value right now?
So, Anish, I think the comfort obviously stays with large cap from a valuation perspective because a whole host of mid-stroke small caps have run up quite significantly. So, from a valuation stroke comfort level and a risk reward perspective as well, large caps obviously offer more margin of safety. So, I think we are obviously creating a bucket and a pool in terms of the stocks on our watch list. ICICI Bank, HDFC Bank, IndusInd Bank, as I said, within the banking names, Ultratech Cement within the cement bank. And also something like if you point out Maruti within the four-wheelers. So I think large caps obviously have a certain margin of safety, but selective mid caps in certain pockets can be expected to do well as well. So out of the consumer discretionary, I think a few of the packaged companies is something that we remain very optimistic about. Case in point being Parag Milk Foods as an example, market leadership in value-added products. Milk prices, the procurement have come off, which means gross and EBITDA margin expansion. They're expanding their retail reach in the next couple of years, which should significantly add on to their margins as well. And therefore, a select category of these packaged foods should continue doing well in our opinion, as well as certain pockets within the capex, manufacturing and infra themes as well. So I think a few of these domestic cyclicals within the mid-cap universe should continue doing well. And a few of these large-cap across pockets, purely from a risk reward and margin of safety perspective, can continue doing well in FY24.
Right, okay, that's the take coming in on whether it's the choice of made in small caps versus large caps. But for now, of course, you've seen the mid-cap index ebb off a bit. Of course, there are pockets of strength which continue there too, like for instance, real estate that we've been marking out. Cement as well is not looking bad at all, with India Cements leading the charts with almost a 5% gain. Actually, the ancillaries of infrastructure and realty, they are the ones which continue to hold out. Adani names looking very smart, and IndusInd Bank as well continues higher. ONGC too is a big mover today, 3.25% higher there as well. And then, of course, you've got Axis Bank, Infosys, like Anisha earlier flagged off, Bajaj Auto after, the fact that the board is going to be mulling a buyback. 4 days from now, that stock was seeing a follow through to start off trade with, and from there it's eased out a little bit. But let's get in some closing ideas on that note. Kush, what's on your list?
One stock that I've been tracking, and has shown good strength is Jyoti Labs. Again, the stock was in a bit of an uptrend, consolidated a bit with a positive bias and has given a breakout today. So Jyoti Labs is on my radar. 514, 525 are the near-term targets, and 492 is where I would place my stop loss.
So that's a closing trade idea from Kush. What about you, Kunal?
So from the Birla group of stocks, Aditya Birla Fashion is something which is looking attractive, and that's a stock which is headed towards a breakout about 240 mark. It looks very attractive in terms of the volume pattern. So that's a stock which I've chosen for closing trade.
Okay, and I think from the IT pack, Birla Soft is the one that you like. Not from the Birla group, but nonetheless, just Birla Soft is the stock that you like, right? One of them. Okay, time now to head into a very short break. Don't go anywhere. When we come back, we'll discuss more stock with our battery of guests.